Welcome to a new segment of BBN TV. I'm Dan Freeman from Freeman Wimhoff Gatlin. And today I have my co-host and partner, Carol Gatlin. And our special guest today is Todd Grull from Entrust Midwest.
Yes, thank you.
Welcome, Todd.
Thank you.
Today's topic is the GO Zone. Carol, can you tell us what the GO Zone really is?
The GO Zone is a region. It's in southern United States. It includes Mississippi, Alabama, and Louisiana. And what it does is it's a designated area where special tax benefits apply. And these tax benefits were enacted December of 2005. They're retroactive to August 27 of 2005. I believe it's 27. So what the deal is if you buy new property in this designated GO Zone region, and it's on a county-by-county basis or parish-by-parish basis, there's extremely phenomenal, incredible tax benefits. Tax benefits I have not heard of or seen anywhere else at any other time.
This is a result of the hurricanes that were so devastating to that region, right?
Yes, it's the government's answer to introducing an influx of money and economy into the area, right?
Well, can you tell us some of the tax benefits that are available for investing within the GO Zone?
Well, I'm going to focus on one in particular. There's some credits, there's some other enhancements, actually kind of rolled up into the same similar legislation or some issues with the Liberty Zone. And so I'm not seeing a whole lot on any of those. What's really going to apply to our viewers is the GO Zone bonus depreciation deduction.
Okay.
And I don't know how many viewers are familiar with our Section 179 depreciation deduction. And if you're not, it's an important thing as a business owner to know. And that's if you have taxable income and you've bought some capital assets during the year, and that could be this desk, it could be equipment,
a
computer, sometimes a car, delivery vans. It all depends. But as you've made purchases for your business, as long as you're within certain limitations and you have capital or income, which is important here, we can elect Section 179, which says that you're going to just write off that capital asset instead of depreciating it over its life.
Right.
So this is a big bonus. This means that, particularly in most of these capital expenditures, they're being financed. So let's say you finance a new computer system for $10,000. You might pay $2,000 for it this year, but if you take Section 179, you're still going to be able to write off $10,000. And so it's a great benefit. It's very positive cash flow wise. And one of the key criteria to tax planning is defer income and accelerate expenses. So we're accelerating expenses, and we're doing it even though on your personal financial statements for the business, you might not want to take the position to write off that asset. You might want to slowly write it off so your financial statements look better for the bank. So you can take two different depreciation positions, and it's completely legal, just like the GO Zone.
Well, you've talked about the Section 179. Going back to the GO Zone, how is that the concepts similar between the GO Zone and the Section 179? Well,
new asset purchases in the GO Zone, we're talking about buildings generally, they are subject to the bonus depreciation, which means that 50% of the purchase price of the new building you may write off in year one.
Well, you and I both know that that's not typical. That's very unusual.
Typically, it's either 39 years or 27 and a half years. So we've taken, and I'm going to make it simple and say $100,000 purchase.
Right.
And we know you can't buy a building for $100,000. Typically, you would have to write that off over 27 and a half years or 39 years. But if it's in the GO Zone, it meets the GO Zone qualifications. 50% of that's deductible immediately this year. That's $50,000. And by the way, this is not an election. It's mandatory. GoZone, you must deduct the GoZone depreciation, or you may elect not to. So it's a requirement to do it. If you're not going to benefit and you really don't want that special treatment, you have to elect out of doing it.
Well, going back to that Section 179 discussion, you said, we can only take the Section 179 deduction to the extent that we had income or the asset purchase price. Well, does that same restriction apply in the GO zone on this piece
Nope.
of real estate?
No, it doesn't.
So in other words, I've got, say $75,000 of income, and I can write off $50,000 if it's a $100,000 building, or if it's a $500,000 building, I can generate a $250,000 deduction. Well, that's obviously exceeding my $75,000 of income.
Yeah, so
What happens to the rest? Am I just out of luck?
You're not out of luck. You have all kinds of strategies here. The mandatory strategy is the difference, which is called a net operating loss, is carried back 5 years.
Wait a second. The rules say you can only carry it back a loss 3 years.
Oh, Dan, you're trying to trip me up. It's actually kind of comical. No, with GoZone, it goes back 5 years. If
So
that's
it's a
not to your
special-
benefit.
So it's a special exemption just relating to the GO zone.
This is very specific law to the GO zone. So if you're, if that's not to your benefit and you did not have taxable income to offset 5 years ago, you can elect, and this is again another election, to carry it back only 2 years. Now you can say, well, 2 years ago isn't a good time for me to carry back that income either, or that loss. I don't want to carry back at all, because our carryback alternatives are 5 years or 2 years, with 5 years being mandatory. You can come in and elect to say, you know what, next year's going to be a good taxable year or a high taxable income year for me. I'm going to elect not to carry back at all and carry that loss forward. So we can potentially offset next year's income if we choose. And I'm going to let Todd pipe in here. And
I just been sitting here. This is exciting to me. Fascinating, the fact I need to understand how this can apply to my clients that want to use retirement dollars. So if they go to Biloxi, Mississippi, and they want to use their retirement plan dollars to buy a 3-bedroom condominium for $300,000, how would this GO zone credit?
and it's a deduction.
A deduction, okay. Impact that investment. Let's say they pay cash, $300,000 cash out of the retirement plan as an investment in their IRA. How would that help them, or should they be partnering private money with retirement money?
Yeah, see, Todd, you know these answers better than me. You're setting me up. Look at him. So, truly, one of the greatest things about investing in real estate is the tax benefits. And Dan and I both own investment properties. I know you own investment
Yes.
properties, Todd. So we all have investment properties here. And hooray, it's a great market or a horrible market right now. And I don't think any of us are looking to sell. So
Right.
the horrible market doesn't necessarily impact us.
Right.
But the really great thing still is that as individual investors, owning real estate typically shows a loss on your
Right.
tax return. So yes, you have mortgage payments to make, but you certainly get a break on your income tax return.
Right.
So that's a really great thing.
Within certain limitations.
Within certain limitations, there's always caveats.